Global toy giants had been weighing their exit from China since 2007. But the twin shocks of the US-China trade war and the COVID-19 pandemic finally pushed them to the brink. Rising labor costs, geopolitical heat, and supply chain chaos forced toy makers to look elsewhere, and India was right on their radar. But was India ready? 7 years ago, Hasbro, the US giant, asked Indian firm Aequs, "Can you manufacture toys if we move millions of dollars worth of business from China?" Well, Aequs agreed, but on one condition. The deal had to be worth at least $100 million. Today, that bet is paying off. Aequs now runs 2 factories in Belgaum, Karnataka, producing toys for Hasbro and Spin Master. And it's not just them. Mattel and Dreamplast have also expanded their presence in India. But until a year ago, even Aequs admitted that India was still not up to the mark. Not in ports, not in roads, not in production speed, and certainly not at China's level. Yet, something is shifting. The headlines today suggest that India is now quietly emerging as a serious player on the global toy manufacturing map. So what's the full story? Can India truly become an alternative to China in toy manufacturing? Let's decode on this episode of Biznomics. Globally, toys and games were a $320 billion industry in 2023 and are set to grow to $483 billion by 2032. And right now, China dominates the playground. In 2024 alone, it exported toys worth $40 billion. While in FY24, India's toy exports stood at just $152 million. That's a tiny sliver of China's scale. But look closer and the growth is real. Between FY20 and FY24, India slashed toy imports from China by 80%, from $235 million to just $41 million, thanks to higher import duties which were raised from 20 to 70% and stricter quality checks. As a result, India's toy exports have nearly quadrupled, from $40 million in 2015 to over $150 million in FY24. That's a 239% jump. But then, what's driving the push? Well, the real turning point came in 2020, when India launched the National Action Plan for Toys. Besides, the momentum is also geopolitical. Across the globe, manufacturers have long been feeling the heat from rising labor and logistic costs in China. And the erratic US-China trade war, which saw US tariffs on Chinese goods soar to 145% in April 2025, triggered a scramble among brands to diversify their sourcing. Brands are also adapting the China Plus One strategy, turning to India, Vietnam, and Indonesia as alternate manufacturing bases. Yet, India has a long way to go. Let's look at the US. The US is the world's biggest toy importer, and despite the noise, China remains its top supplier. In FY24, India exported $141.8 million worth of toys to the US. That's nearly half its total exports. But China, $27 billion. See, toy making isn't easy. It's labor-intensive, hands-on, and detail-driven. And China has mastered it with decades of scale and tight supply chains. So, China may still dominate. But as costs rise and scrutiny grows, India is emerging, not as a replacement, but as a credible contender. And experts reckon even a small slice of China's lost US market could give India's toy industry the boost it needs, creating jobs, building scale, and powering a new wave of domestic manufacturing.